hope you're doing well. In this video, I just want to talk about something that we can use as an additional tool to our trading. Obviously with the corrective strategy, we are looking to trade probabilities. We're trying to find trades that have a high probability, and we want to get the best risk reward we can on that trade. And as traders, we want to look for the confluences. We want to look for areas of interest. So one of the other tools that I want to sort of add into the playbook that we can just add as another extra to help us refine our edge even more is pivot points, being a relatively well-known tool that traders have been using for a long time. It works on calculating the open and close prices on daily candles, and it calculates these areas of support, resistance, and these kind of pivot levels that sit in the middle. As you can see now, I've just got into a trade on GBP, JPY. You might not be able to see the symbol, but this is an example. Now, pivot points, something that I've used on and off since I started trading, for many, many years. I've always found it as an effective tool for day trading, especially. So for those of us that are trading the corrective strategy on a daily trading method, we're looking at lower time frames. The pivot points can be very, very useful, just extra bit of information for us, and we can combine that with how we understand how the market moves. First of all, if we're day trading and we're trading, on 5-minute or 15-minute charts, we need to be aware of time zones. So we need to be aware of what session are we trading. Day trading is perfect for London session and New York session. So looking around the London Open and looking around the New York Open, that's when there's going to be these active points. That's where there's going to be these reversals on the day, or mean reversion opportunities, or these impulses occurring. That's where we want to be active. The pivot points just give us kind of a framework of what the price is doing for the day. Where is it going? Then there are various statistics. Typically, if we look at here, you've got R1, you've got pivot, you've got S1, and you've got R3. Typically, the price will never break R3. If it breaks R3 or S3, that's a severe move that's occurring, and that's very rare. Typically, S3 or R3 will always hold. So these are little bits of information that we can use to our advantage. Typically on the open, especially in sterling and euro pairs, obviously we're a London session, GBP is going to be active. Traders are going into the office around 7 or 8 a.m. All these banks, hedge funds, institutions, etc. They're all active, looking at the markets, looking at the information coming through, placing orders for clients, etc. So there is trading opportunities in that window of time. Pivot point generally is that midpoint between the levels. If the price breaks the pivot point, and it breaks it considerably, as you see today, we had a bit of a spike through it, but it sort of held. It was kind of trading in this area. You expect that it will go to S1. If it's broken it early morning properly, you'd expect that we're going to go to S1. And if we break S2 and it's only midday, you expect that the market can go to S3. But for example, if we're at 5 o'clock and we are, just trading around S1, it's very unlikely it's going to go to S2 in the same day. That's just a very basic format, but this just helps us with just looking at levels as an extra confluence. Today, I just spotted a corrective setup on GBP, JPY. Impulse, retracement, move lower. So I saw it, placed my fib. I've got this level marked out here, 152.73. It's been a level of support. As we can see down here, it's been an interesting price that we've been trading around. We've been trading through it a bit, and that's where the pivot is roughly sitting. So we know this is a significant price that we can trade off. And we know that if the market is moving down early morning, this is something that I used to do all the time when me and Martin used to sit next to each other on a London trading floor, especially in the sterling pairs. We'd try and catch the move of the day. So if we thought the market was going up, between 9 and 11 a.m. is that typical kill zone where you can catch the daily entry. And this could be a scenario today where you've had this move down and then maybe for the rest of the day it's going to go up. 10:30 now, UK time. is normally in that window of time we would try and catch it, like 9 to 11 a.m. we catch that daily move. So combining that with this corrective setup is quite nice. When I was looking at the price in the 5 minute, I sort of saw it after it had gone through here. I mean, I wish I was able to get the entry at the counter trend. Didn't. I saw it when we were trading about here. Saw that we're sort of accumulating at this pivot point. We're trading around it. So there's a high chance that we will get back above it and go back up to the target and complete the corrective setup. It's more clear on the 15 minute, the impulse here. Another thing we can always do to get a confidence is just look at other fibs. Are there other levels on the chart? Are there other things that can happen? When we're in these kind of ranging markets, you can look at Fibonacci retracements and just see if they're lining up anywhere, or do they protect your stop? So in this scenario, we pull that up. Okay, we're now back above the 61.8. Maybe this is going to go all the way back to the top now. But I've also got the 78.6 sitting on my 38.2. And I've got my stop below that. So that's another area of interest that other traders might be looking at. 78.6 typically has some kind of reaction when you take these swings that are happening in the market. So all in all, this is an all right trade. The risk reward wasn't that good because I didn't get the counter trend entry. There was a second move down which I could have got, but I'd already taken the entry here and I didn't want to double up my risk on this trade. So I just kept my entry here. We'll see if this comes in, but yeah, just wanted to use this trade as an example to explain how we can use pivot points. We can look it up on any other chart. We can look at multiple different pairs and just pull that up and just have a look at the pivot points to get an idea. It's just something we can add as an extra on our chart. It's not something we're going to purely trade off. But for those of us that are day trading, information is key. If we want targeted information as traders, we don't want over information or we don't want paralysis by analysis, but we want targeted information. So pivot points as well as the volume profile can be very, very useful for us. If we look at volume profile in this example of GBP JPY, just quickly, we can see again that when it traded down here, it was very low volume. That's what we want to see. That's typically where we're getting in on the corrective setup, is we're getting in on a very low volume move. That's how we capture these sniper points. All these wicks that happen, typically they're low volume because not many people want to trade there. That's why they become reversal points. There's not many sellers. Once it gets to here, there weren't many sellers there. There was a few buyers, there was a few orders, but there wasn't many sellers that wanted to sell it lower. And that's why it becomes a reversal point. And that's why with the corrective strategy, we're capturing these snipers. So again, this is another thing that we can look at. And we can look at the volume profile. If it's trading really high volume down here, again, that can mean that there's a battle occurring between buyers and sellers. So it can still be that support, or the sellers can win and then it can just explode, or not explode, but collapse lower in this case. So volume data, again, is something that we can use. And as we can see, that the highest traded price was actually the retracement level today. So we expect we'll go back up to that price, and that's why we want to get out at that point of control. Market wants to go back, retest there, probably spike it a bit, and that's where we're at for the day. And these are the kind of trades we can take. Nice short-term trades, in and out. We've made our money, we've made our bread and butter, and we can move on. So yeah, pivot points, great example of something we can use. As you can see on CFH JPY, same thing, we retested that pivot level. Was there a corrective there? I don't know. Well, it was not really in this case. The GBP JPY was better. On the 5 minute, you've got a 50% retracement, so you could arguably have bought the pivot, the counter trend, and run it up to there for your 11 pips, but the movement itself wasn't as clean. But yeah, guys, thanks for watching. I will share this pivot point indicator into the Discord group, and you guys can download it, add it into your MT4. Yeah, any questions, feel free to let me know. I just thought this could be another little extra tool we can use. Using Fibonacci, we're using support and resistance levels, we're using wicks in the market to find those extremities, and then we can add things like pivot points, RSI, and market profile. And then we've got so many nice data points we can use to make very accurate trading decisions, get in and out of the market, especially with day trading. These can be very nice tools for us. and we can really start to scale up our lot sizes and have the confidence to take those trades and start earning some serious money on a daily trading basis, especially if you go on to get funded and start trading some six-figure capital. You can really utilize all these tools together to have a very solid framework for your trading.